So in my yesterday's video, I talked about how trillions of dollars are coming due by the end of this year and next year, 2025. I talk about the CMBS, which is the commercial mortgage-backed securities, how that is possibly in a lot of trouble down the road, how a lot of banks may be really exposed to this. Check out that video, I posted it yesterday. I go full into details about that and how I compare it with the examples of 2008 and how that time in 2008, how that real estate bubble, it was way smaller than what we are seeing today, and what that could mean in terms of possible losses in the stock market and also the economy. Check out that video. It's I'll put a link in the description so you could watch it as well. But let's talk about something new today, something that came out from Bloomberg, and came out from Bloomberg basically stating the headline here: Yellen says commercial property is a worry, but regulators are on it. So now you have the Treasury Secretary coming out, the Treasury Secretary of the United States coming out saying, yeah, commercial properties are a worry. But what's weird is we had the Federal Reserve, Jerome Powell, come out and say that we're not too worried about the banking system, nothing there, nothing of big risks there. But you have the Treasury Secretary saying that they're worried about it. But regulators are on it, and things should be fine, according to the Fed and maybe even Yellen. So let's get into this article here. I'll dive deep into it, starting with the first paragraph saying, Treasury Secretary Janet Yellen said that while losses in commercial real estate are a worry, U.S. regulators are working to ensure that loan loss reserves and liquidity levels in the financial system are adequate to cope. A combination of factors is going to put a lot of stress on the owners of these properties, Yellen told lawmakers Tuesday in the first of two of congressional testimony this week. She cited the increase in interest rates, higher vacancy rates thanks to shifting work patterns triggered by the pandemic and wave of commercial real estate loans coming due this year. And yes, a lot of buildings. There was one building in San Francisco that is valued and worth around $300 million before the pandemic hit, and that building is getting bids of 80 million, not 300, 80 million, way lower than what the actual value was previously. So yes, you are seeing massive hit to the value of the commercial real estate market, and it is seeping into other areas as well. This is not just office buildings. We also heard from Fitch yesterday when I talked about how Fitch sees the delinquency rates for apartments to also rise by double amount, right? So you would think that it's only offices that are in trouble. No, there's other areas in the real estate market that is also in trouble, and you're starting to see that weakness show up. Now, the third paragraph says, I'm concerned, she said, responding to a question from Missouri Democrat. I believe it's manageable, although there may be some institutions that are quite stressed by this problem. So, okay, here you go. She's saying it right there and then that she's concerned. Expect more banks to fall under and have a big problem. So if you think that this was, the end, that in 2023, that crisis that we had with Silicon Valley Bank, that's the end. No, expect more. And we actually see New York Community Bank Corp actually fall heavily in the last couple days on this whole commercial property fiasco, right? Now, and New York Community Bank Corp was asked to Yellen, but she denied, and she did not say anything regarding. She actually said, I don't want to comment on the situation of an individual bank, but commercial real estate is an area that we've long been aware could create financial stability risks or losses in the banking system. There you go. You have the Treasury Secretary telling you there's risks, the financial stability, the risk to that, the losses in the banking system. Definitely, we could see that continue, according to Yellen, right? But the Federal Reserve says no problem in the banking system. But guess what? Remember when I talked about the Fed's FOMC statement? And I said that why did they remove the line where that they see the banking system safe and sound, right? They removed it from their statement. Do they believe that the banking system is not safe and sound anymore? Well, you're starting to see, put the puzzles, the pieces together. The picture is getting quite obvious now, right? As that $1.5 trillion of debt is coming due by the end of 2025, we can expect more banks to have losses, especially the small regional banks that are heavily invested into the commercial real estate market. You're gonna see some pressure there. And yes, there will be also some big banks also that will be affected by this as well. It will seep into many areas of the markets also. This is just the beginning. Please watch the video that I posted yesterday on the commercial real estate fiasco, the CMBS. Check that out. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.